Hi, and welcome to Pleasant Trading. Today I want to talk a little bit about reversal patterns that happen in the market. So, if you're familiar with trading and you have some experience trading already, you'll notice that there's a lot of times when the market's trading in a perfect trend and then stops at some point and reverses. And for whatever reason, it goes all the way back. So, if we're looking at my charts here I'm looking at Amazon here on all four charts minus this first chart here. I have to change this over. Just link it back. So if you look at these charts here, you can see that today on Amazon on this 15-minute chart, we went down all the way for a good amount of time, almost into a double bottom, into this pre-market area here, right? This was the low here, kind of broke below that, like was coming down to this low here. And then at some point we just turned around and went back up, right? So this would be a good example of just a key reversal that happens in the market. So looking at this pattern here, you could say a few things that we had one leg, small pullback, second leg, and then it just kind of went all the way back up. You can also say this was a V bottom down here. But what I try to look for is what is a good indication that you're going to get a reversal in any particular pattern, any type of chart that you're trading. This candle right here was a good indication that the market was going to pull back. And the other good indication was that the next bar that opened up, it didn't break the low of this, right? So if you have a trend going on, you kind of want to see, a red bar happen, and you want to see the next bar open up on the side of it and then break the low of the previous bar to continue further down and continue further down. It's okay sometimes if a bar pulls back and you get a green bar, like this one was, but the next bar should come down red and continue lower and lower. And you get reversals when you don't have that. So this next bar opens up, maybe it was slightly red at a point in time, but it just pretty much went back green. And these are the things you want to watch out for, especially when it erases a lot of the red to the left of it. So in this case, you had this green bar right here that stopped everything. Then you had this bar that kind of erased this whole red bar right here. And we kind of went sideways for a little bit here, point of indecision. And then slowly but surely we started to go higher and higher, erasing all of the red that we had put in earlier that day. So if you just look at any chart that way, after it's been going down for a while, try to look for key signals that you're going to get a pullback if you're new to trading. If you know a lot about trading, then maybe you would say to yourself, this is overextended because you have more to 3 to 5 bars down. This is overextended because maybe the price, it opened up at 1539 here at the top somewhere, and then by the time it got down to here, we were almost about to break 1500, and down here we actually broke 1500, 1499.26. So there was a lot of key signals that saying, hey, maybe we're getting tired, maybe we're getting tired. But this was an abrupt turnaround because you have a V bottom there. So let's go somewhere else and see if we can find something else that's overextended. Facebook kind of did the same thing. And in Facebook, we got the same kind of pattern that happens with a lot less candles, right? So in our other example of Amazon, it took, maybe 2 or 3 candles. It took about 2 candles to turn around and go back up, right? And in this example here in Facebook, you get the first leg down, that pull back, get the next leg down, and then it tries to pull back, and then does a third leg down, and then here, it just completely erases the bar that's in front of it, which gives us a good indication that we're going to reverse, and it starts to go back up. So these are key things that you always want to look for whenever you're trading any type of chart, is that, when are you going to get a reversal? A lot of times when you are trading, you'll notice, after, like I said, a long period of the market moving in a particular direction, maybe it's been going up for a while, maybe it's been going down for a while. Especially if you're day trading, you should probably be watching the price to see how much has it moved. If we've moved already $10 or $15 and the average true range of that stock is between $7 and $10 and you're at $10 and $15 already, well, maybe you're going to get a pullback. Start to look for other signs of that pullback happening on the actual chart though, right? So you want to see that, if you had a long period of going down and you have moving averages on your charts, This Bollinger Band would have told you, hey, you know, we're kind of getting outside of the Bollinger Band here and then outside of it here. Or you could have been looking at the price to say, hey, after all these red candles down, the price has significantly come down now. And even if we don't pull back completely, we may pop back up, because if not, Google's going to break $1,000. It's at 1,010. So these are just key symbols and key things you want to look for. And you also want to pay attention to what time it is during the day, right? So maybe this morning at 9:30, something like that, you know, there's a lot of news for the market to digest. The market opens up and Google, for whatever reason, comes down. You're a technical trader. It comes down and, you know, it continues down. It gets more continuation, more continuation. Well, at some point throughout the day, the market's going to get tired, or it's going to get tired of going down that way. So you want to pay attention to market times and, you know, the price and chart patterns and all these things, but all of them together is what I'm trying to say. You want to pay attention to all of them together. So you're kind of thinking about the price, or you're thinking about what time it is throughout the day, while at the same time you're also thinking about, you know, the moving averages and where they are and things like that. And this is if you don't use a lot of technical patterns. If you're not using bear flags and bull flags and symmetrical triangles and breakout points and support and resistance and a lot of things like that. Because there's a lot of other patterns that also tell you that this market was coming to a slow reversal, even if you weren't looking at some of the things that I'm talking about today. So just a very short video on just how to look at some of the different reversals that may be coming up soon as you're trading and as you're growing in your trading. It's always something to pay attention to. I know for a lot of traders that start off trading and are not familiar with, you know, how markets move, you can easily get sidetracked and end up trading long when you should be short, or short when you should be long, or it went down for 2 days straight and on the third day here you come and then, you know, the market does something opposite. These kind of things can happen a lot. So you want to make sure you're not going off of past experience, but actually looking at what's happening right in front of you. You know, um, you can't go by what you think. You should go by what you see whenever you're trading. And going by what you see just means that go by what you see. Today could be completely different from yesterday. So if we have a long period of moving down in the markets and then we get this long bottoming tail here, maybe it's time for the market to turn around. And this is on a 15-minute chart. If we looked at it on a 5-minute chart, there was a lot more hesitation, a little bit of green, red, but eventually it turned around. But it also had been going down for a long time too. And at some point in the middle of the day, or 10, 11 o'clock around here, it started to turn around. So just small things to pay attention to that will make your life a whole lot easier as you take on your trading adventures every day to trade, because every day it's an adventure, because every day it could be something different. And if you have the key things to just kind of look out for, okay, how many bars is it moving down? At what price is it? What price did we start off this morning? What time is it throughout the day? And you just start thinking about key things and, okay, well, we've done too much on the downside today. We have to turn around. Or we've done too much on the upside and we have to turn around. And on the days when you can't figure it out, that's when you sit back and you watch and you learn. Because trading will always be something different. Therefore, there'll always be something to learn. So I hope this video has been helpful. Leave a comment and feel free to follow.